Interest rates continue to come down, potentially faster than anyone anticipated. And the Bank of Canada, well, they just hit their 2% inflation target, also arguably well ahead of schedule. But then there's the real estate market, bringing it up the rear, which begs the question, hey real estate, what's the matter you? Hello friends, and welcome to the first fall edition of our Greater Vancouver Market Update for 2024. As you know, we are the source for unbiased, unspun analysis of the housing market here in the Greater Vancouver region. If you find this content valuable, we'd greatly appreciate it if you gave it a like, shared with a friend, and hit that subscribe button down below if you haven't already done so that you don't miss out on any future episodes. All right, let's start off like we normally do by going over last month's stats, starting with the sales figures, which came in at just 1,904 transactions throughout the region. This represents an 18.4% drop from the previous month. Now, whenever the monthly sales figure drops below 2,000 units, it always raises eyebrows. But then you take into consideration that August is traditionally a very slow month in the market, as many people try to enjoy the last true month of summer by going camping, hiking, or lounging at the beach. But if we look at the month that was from a historical perspective, the August sales numbers were pretty dismal, 26% below the 10-year average for the month. And on a year-over-year basis, as real estate activity is very seasonal, last month's sales volume was 17% lower than that of August 2023, so not exactly gangbuster figures. Listings also took a dip, but a far more modest one, coming in at 13,812 total listings for the month, a mere 3.6% drop from July. Now, it's not uncommon for sellers to also put their plans on hold during the summer by taking their homes off the market if they have been unsuccessful in selling them over the previous few months. So, why did the number of listings only drop marginally? Well, that's because new listings were up nearly 21% above the 10-year average for August, which kind of speaks to how many people are in a situation where they feel they really need to sell despite being in one of the slowest months of the year. And so with sales dropping at a much faster rate than listings, our months of inventory, which is the listings to sales ratio, took a pretty drastic jump to 7.3 MOI, the highest it's been since January 2023. Once again, anything over 6 months of inventory is considered a buyer's market, which means downward pressure on prices, and the home price index confirms as much, with the benchmark price in the region dropping to 1.195 million. This is now the third consecutive month of declining prices according to our board, but the smallest month-over-month drop from this recent downward trend. This could be seen as somewhat surprising since our months of inventory is sitting as high as it is. But I would attribute this to the large influx of new listings. You see, sellers are understandably reluctant to accept lower than expected offers in the first few weeks of being on the market. So naturally, prices wouldn't be dropping as quickly on the aggregate if there's a large number of new listings contributing to our total inventory. All right. Now you know the numbers, but that's just part of the story. Stay tuned for our editorial segment called Boots on the Ground on our various social feeds in the coming days, unless of course you're watching this on YouTube. And if that's the case, that portion of the update starts now.
These boots are made for walking, and that's just what they'll do.
Boots on the ground is always a bit of a tricky tightrope to walk because in the first part of the update, I go over last month's stats as released by the local real estate board. And those are always last month's numbers because that's the last complete full set of data we have to review. But this segment of the update is an editorial of what we're currently seeing in the market. And in Vancouver real estate, sentiment can shift quickly. Also, I'm only human, so admittedly, recency bias definitely creeps into the copy from time to time. And that's particularly telling this month because let's face it, we're not in a state of status quo with what is going on in terms of financial policy changes as well as targeted benchmarks. We are all of a sudden in an environment of aggressive interest rate cuts with 3 consecutive rate drops over the course of the last 4 months. Most economists are now predicting an even more aggressive drop of 50 basis points at the next rate announcement in October. And just last week, the Bank of Canada hit its highly sought after 2% inflation target that they have been eyeing for the last 2 years. So there's no doubt that we are at a point where things are changing relatively quickly and the pendulum is starting to shift in the opposite direction. So despite the August stats showing the market sitting at 7.3 months of inventory, which is a less than flattering rate of absorption, there has been a palpable feeling that buyers are starting to come out of the woodwork. But activity is still pretty spotty at best. We had one new listing about a week ago that had 28 groups come through the first open houses, but we got no offers. We had another listing where we had only 3 groups come through the open houses, and we got 2 offers on that one. Overall, open house traffic is still relatively slow, with many of my colleagues hosting opens after sizable price reductions on their listings and having no one show up, as in 0 groups coming through. Generally speaking, offer dates are still rarely being used unless the listing is strategically underpriced, of course. But then, they are a flop more often than not. I often get asked by clients why a property has increased their price by $50,000, $60,000, $80,000. If you see this happening, it's because the listing agent's strategy was to underprice the property with an offer date in hopes of getting multiple offers and selling the property well over asking price. But what is generally happening right now is that the property either receives no offers on the offer date or ones that simply aren't high enough for the seller to accept, at which point they readjust their price higher and closer to the seller's actual bottom line. And in general, the market is very unpredictable at the moment. Properties that you wouldn't expect to sell quickly end up doing just that, while others in highly desirable areas are sitting on the market for much longer than anticipated. But with all that being said, it does feel like we are in a much better place now than we were in May or June. Buyers aren't quite ready to go full on inferno, but you can tell that they're circling those musical chairs, watching things very closely, waiting for the music to stop. They just don't want to be the first ones to actually plant their butts in a seat. All right, that's it for me for this month. Please consider hitting that like button, subscribe down below so that you don't miss out on any future episodes, and I'll catch you right back here in about a month's time. Take care, everyone.